stock markets are volatile, government bond markets are rallying, currency markets, well, they're all over the place, and copper is heading down, trading below $9,000 a tonne for the first time in nearly 6 months. Amid all of the noise, this may be one of the more telling signals about the economic outlook. Usually, a firm copper price, well, that be seen as a good sign for the health of the global economy, as the metal's malleability, conductivity, and ductility mean it's got many industrial uses across infrastructure, construction, and cars, to name but 3. It's not for nothing it has the nickname Dr. Copper. But now, fears of a recession, or at least a slowdown in America, the world's largest economy, are gathering, and that seems to be exerting a bit of a downward pull on the copper price, especially as China, the world's second biggest economy, is having trouble pulling itself out of its post-COVID funk, given the ongoing collapse in its commercial real estate market. Another chart to watch may be the relationship between copper on one hand and gold on the other. If copper does better than gold, this may be market's way of saying that good times are ready to roll. If the precious metal outperforms the industrial one, that could be an indicator that something bad's about to happen. An inflationary outbreak, a stagflationary outbreak, or a recession. And frankly, stagflation probably the worst of all of those worlds, given what it did to most asset prices in the 1970s. Copper is priced in tonnes and gold in ounces, but the conversion is an easy one at 35,270 ounces in a tonne. Now, if the line on this chart rises, then copper prices are doing better than gold. And if the line on this chart falls, then the precious metal is outperforming the industrial one. Right now, gold is doing better than copper, which could be suggestive of a slowdown or stagflation ahead, which kind of fits with the equity market's summer wobble, but not admittedly with a drop in government bond yields, as we'll see what develops there. In the meantime, FTSE 100 member Antofagasta is nearly a pure play on copper, though it does also produce some gold and molybdenum, and the Chilean miner is due to report its first half results for the first 6 months of this year on Tuesday the 20th of August. The miner's share price has, perhaps not surprisingly, slipped lower of late to reflect copper's weakness, not helped by a mixed trading update in July. Investors and analysts will now get to dig deeper into the detail with 5 key sets of figures in focus, and the first is copper output. This is forecast to come in between 670 and 710,000 tonnes, higher than last year's 661,000, with sequential improvement throughout the year, but management has now steered that towards the lower end of expectations after that lukewarm July update. The second key figure is costs. In 2023, net cash costs came in at flat at $1.60 a pound, and management had initially expected a modest increase to $1.65. However, the company nudged that focus up to $1.70 with that second quarter update, thanks to lower ore grades at the Centinela and Los Pelambres sites. That is equivalent of around $3,750 a tonne in metric terms, so it's still well below the prevailing copper price. The third key number is profit, and that's shaped by output and costs. For 2024 as a whole, analysts are looking for a one-quarter increase in pre-tax earnings to $2.5 billion, thanks to higher output. In the first half of last year, it made $765 million, but I should say that Antofagasta's management preferred profit measure is earnings before interest, taxes, depreciation, and amortization, or EBITDA. The company made $1.3 billion in EBITDA in the first half of 2023, and analysts are looking for a year-on-year increase in this year as a whole. Fourth figure is capital expenditure. Antofagasta spent $2.2 billion last year, and that's expected to jump to $2.7 billion this year, thanks to investment at Centinela and Los Pelambres in particular. And the fifth and final figure is the dividend. The total payment fell in 2023 to 36 US cents from 59.7 the year before. Analysts expect a further decrease this year to 34 US cents a share, thanks in part to that increase in capital expenditure. In the first half of last year, Antofagasta declared a dividend of 11.7 US cents a share. I hope that you and your families are all keeping well. Thank you for watching, and I look forward to seeing you again next time.